we talked about some of the issues that you guys talked about, and also we talked about throughout the day, are related to quality control, avoiding delays, possibly preventing fraud. Now, these are not issues that we haven't seen in markets before, and eBay comes to mind, and the way that eBay addresses these is through a reputation system for both sides of the market. And I was wondering, do you see this type of a system emerging in crowdfunding, where we could have, let's say, reputations both for people seeking funding and also for the backers? And what could be the role of that? So let's.
Yeah, I mean, it's a very interesting problem for us because we are an open marketplace, so we don't do any curation. So I think that the problem is even exponential for us. But I do think that just generally, the social graph that people have has evolved to a point that we can get comfort really, really quick about who people are. There are things that people cannot game as easy, right? So we had a great example that was in the press where we had basically a campaign out of Russia, and Pando Daily decided that it was complete fraud, and I mean they went to the mat for it, and they have their right to do that. For us, what we did was we were fairly certain that this person existed, that he was a real person, that we looked at exactly how he built his reputation online, whether it was you don't just wake up one morning and add 600 LinkedIn, people to your profile, right? There are things like that now take a very long time for you to build. So our approach so far is more to focus on making sure that we understand that these are people, that they live where they say they live, that their bank account ties to who they are. There's a lot of information now. It's kind of like scary NSA stuff where we don't even know how much is out there about ourselves. And there's a lot of power in that. So for us, we see an eventual place where you will have kind of like a trust badge, right? Which is you are somehow certified as a trustworthy individual. And we see companies like that pitch me every day. Because they got this next product that's going to be something like that. But there will be an evolution. It's going to be hard because delivery is always going to be something that's going to be challenging. But as far as pure fraud, which I think was determined earlier, someone said there's very, very few instances of fraud. There may be poor quality and things like that. And I think that crowdfunding is going to continue to evolve to try to protect people because it's all about trust. At Indiegogo, trust is number one thing. The word trust, which is different than fraud, right? Because fraud rates are low, but trust has to be high.
To build on that, as we move from, let's say, markets for products or funding, let's say, theater projects, could it be, as we move more to equity, crowdfunding, then some of the validation that Shinoki talked about, or wisdom of crowd processes, like the agreement between the experts and the people, maybe a little bit more of an issue. Because if I'm funding a theater project, maybe the fact that someone wants to see the play, it's a pretty good signal for quality or potential market. But when it comes to funding startups with equity, this is something where you could argue that your typical average user may not have expertise. So to what extent is this a concern as we move from to equity-based crowdfunding?
So I think that's a real issue because having come from Wall Street and working with disclosure and thinking about disclosure, in order for somebody to make an investment, you have to have the proper information. And especially if you're doing early stage investing, I can speak as an angel investor, you actually want to meet the person. You can look at the data, you can look at their projections, but you actually want to sit and have coffee or dinner with that person to get a sense of that entrepreneur. So I personally think it's a little bit riskier than doing a reward base where you get something and you're not expecting to live with the company forever. So I think it is an issue, and that's why you see right now you've got sites like CircleUp and AngelList where they have approved accredited investors that are investing on their platform. That is a little bit easier to get because those people are high net worth individuals and they are in a position to make those decisions. But when this opens up with the Jobs Act and once the SEC finishes their work, It really allows any person with kind of a modest amount of income to make an angel investment. And I think a lot of people are going to lose a lot of money because early stage investing is really dangerous. It's like buying a lottery ticket.
Yeah.
You know,
Ethan, I think
most
you have a
investors, expect 10 investments. You have a portfolio, 8 are going to, not work out, and 6 are not work out, and 2 will kind of break even, and 2 will make your return. So that's, what the average person is going to be facing online.
Can I just comment on that? Actually, those statistics are derived from professional venture capitalists in their portfolio.
Yes.
So I think that it's erroneous to keep using that statistic, because when people are just throwing money at unknown investments, they're probably going to have a worse result.
Yes,
They have no expertise.
yeah, and I'm quoting angel investing groups like Golden Seeds and New York Angels and things like that, which are kind of professional, they're not just the average person. So yeah, it's pretty treacherous. When you agree?
And yes, I think Ethan also has a perspective, and let me kind of build on that, because you mentioned that you don't see fraud in the projects you studied, but when we move to equity type of projects, could we see the equivalent of the Boiler Room or the Wolf of Wall Street?
Right, so I think there's 2 separate things. There's fraud and risk, and those are different things. And let me talk about fraud briefly, because I think risk is a longer conversation that we can talk about, but they're related. So I think bubbling through a lot of the presentations has been Linus's law. Has anyone defined Linus's law yet? Because I've heard it mentioned a couple times in passing in the outcome. So Linus's law comes from Linus Torvald, the inventor of Linux. And the expression that Eric Raymond used about Linux is, with enough eyes, all bugs are shallow. That means if you have enough people looking at a problem, it's going to be trivial to someone. That's the whole sort of mechanism behind the crowdsourcing movement. It's the mechanism behind Kareem Lakhani's work. And I think that's part of why fraud gets stopped, is that you have enough eyes on the problem that if those signals can, and I think the one concern I have about Indiegogo is you need an authority who sort of says, okay, the signals are getting bad, I'm going to pull the brakes on this. So I think it's an open experiment to find out whether or not that whether that ends up being an issue or not. So I think that the advantage of this is VCs aren't magical either, right? All the good evidence now on VC research seems to show that they have incredible problems picking a big hit twice in a row, that it's almost all status-based, that the top VCs get all the returns and everyone else loses money. So I think that there's advantages in markets where people are part of that market, part of a community, and there's enough eyes on a project. You might actually find less fraud and more successful projects that aren't started by white guys with Harvard, or Stanford degrees, which tend to be predominant in sort of the VC world. So I think that there's a tension here, but there's, I think saying we're so worried about fraud, we're shutting everything down is dangerous too, because the current world is pretty biased also.
Right, the open source law, which is I guess not Linus' law, is that if there are enough eyes on all bugs are shallow if you get enough eyes
That's
on
right.
them,
Yep.
right?
Mm-hmm.
Now let me get Gordon's perspective, and actually you mentioned that the behavior of the basically referrer affects the behavior of the people that they make the referral. Now, can you also, in addition to your perspective, comment on the fact that this can start what we call information cascades, or also known as herd behavior?
Sure.
And
Sure. So actually, I'll just start off by
it's
commenting
related.
just a little bit on that last point. So one thing to keep in mind is not just about when equity crowdfunding starts in the US, because it's already kind of going on some platforms, just only with accredited people. And I think even the comparison between accredited investors partaking in online investing of this sort compared to the offline or venture syndicate approach, there's already a stark difference there in terms of the access you have to information about the person, right? Because there's geographic separation. In the past, you also had to be able to know this person. There was no public advertisement of these things, right? So Title II is already passed, it's in place. I can go on Twitter and say, come buy a piece of my private company, right? You don't know me. We've never met. We probably never will meet. So how much can you really know about me, and how much can you properly evaluate my company? So there's already this additional information asymmetry that's happening. So these reputation mechanisms, sure, that's one approach. The other thing that's been talked about earlier, I think, was the fact that you can tie to a real-world profile, right? Airbnb does this. A lot of these sharing economy type platforms are doing this to help mitigate the problem. So that being said, yes, I also agree that there is a huge potential for bubbles to start. So you may be familiar, I can't remember the exact case, but at least in February or so of 2013, it came out there was this company that essentially would buy you a spot on the New York Times bestseller list for your book if you asked them to, right? And the whole goal of that was that once you get on that list, everybody sees it as a source of validation because everybody else has already bought your book, it must be good, I'm gonna go buy it too, Okay? So if you're in this situation where, as we've shown, there's a lot of peer influence that happens, it may be negative. We have shown that in another paper that there's a substitution effect. But a lot of the time we've shown it's actually positive. And other people have shown this too in peer-to-peer lending. If this is going on, there is a huge potential for a bubble to happen. So yes, I do agree with the general sentiment that if there are enough eyes on something, then all bugs are shallow. At the same time, if there are enough eyes on something, people may miss the point, right? And then the bug gets really deep and becomes a huge problem. So it's not necessarily guaranteed to be self-resolving, I think.
But the one thing, though, I just want to make about the all eyes on we'll find the bug, or however that's phrased. I mean, I think about that as the public markets. Think about it. You have public markets with stocks and research reports and investors every day, every second, watching the market, the information. So that's not necessarily a situation where the problems are ferreted out, or it's a clean, produces a clean system. So it's, this is another financial market that's in its infancies, but it's very similar and will develop probably very similar like the public markets are
and
today.
I also think that at least the way that Title III is envisioned now, which I think is totally flawed because it's going to have too much constraint, is that because of the limits, a bubble, like in the term of like this ginormous bubble, is basically like sort of impossible. You can have a lot of little bubbles, right? Because there are limits both to how much an individual can contribute, but also how much the individual company can raise. It's not like they can go and raise $100 million. Matter of fact, there's more chance now for it to happen now in crowdfunding or anything that's out now, because there's an unlimited amount of money you can raise, than there will be in Title III, when the companies actually start raising funds.
Okay, but while we're waiting, I guess, for these rules to be drafted, let's open let's open the questions from the floor. I know Avi raised your hand even before the panel went.
So something Deborah said struck me, which is that you said we have 78% successes, and you were comparing and saying, hey, we're doing better at some level.
Yeah.
And I'm trying to think, is there an optimal percent success? Is there an aim that you should have in terms of percent success, or do you just want to? Or are we striving for 100? What's going on here?
Yeah, I think it's really a company's individual strategy. So and it's just like accepting all projects versus curating projects. So it's a strategic decision of a company. We are very strategic. We do not take every project. We work a lot telling our project creators, you know what, that goal is too great. We don't want to see you succeed, because we believe there's no advantage for anybody. If you spend your time and have a failed campaign, it's a drag. It's a drag for you. It's bad for the company. So we want to keep our numbers up there. I don't know if we will succeed, but we have some very specific things we do. We have a metrics based on how many people you know and the dollar amount you're going to raise, how likely you are to be successful. It's not that complicated, and I think if you do a proper campaign, you're probably going to succeed. I think what happens is a lot of people are naive.
Mm-hmm.
They think, oh, put it up there, people will come running. And it doesn't work that way. And a lot of it is your own network, your own work that you're doing. Because platforms are increasingly getting bigger and bigger. So even if you've got a great campaign up there, the chances of you being discovered, unless you're, hit a certain critical point, you're not even going to be on the front page.
Yep.
How are people going to find you? Kickstarter had 19,000 projects. Okay, so you're going to have to do a whole lot of digging. Sometimes you can't even find projects you want to find. So it's really up to the project creator to have a strategy, and I really think it's up to the platform. It's also some platforms, I know what happens is the crowd actually comes back and says it's not a question of fraud, like it's bad or incomplete information. It's a question the crowd will come back and go, that's a really crappy thing to do. So there was, the one, I don't even remember which platform it was on, but there was one guy who was, had some manual he was producing on how to, drag women into bed or something like that. And it was like, the crowd started saying, wait, we don't want to see that project out there. So, I think that's not a question of fraud, but that's actually people saying, and then eventually that project was taken down. So that's a question of the community saying, what if it's a legitimate organization, but it's a terrorist organization? There's no fraud there. They're saying exactly what they do, and people are funding it. Is that cool?
Let's try and
I
get a
just
couple
wanted
of more
to- I wanna
questions in.
clar-
We have one question from the back there.
In terms of research or like best practices, do you see entrepreneurs playing the
Ethan?
So we actually have a little data on that. So there are people who launch simultaneously on Indiegogo and Kickstarter. There are also plenty of people who do it sequentially, so they launch and then launch again. I will tell you that if you launch the first time and you succeed, your chance of succeeding in future projects goes up by somewhere between 30 and 60%, even if you raise the amount you're going. If you fail the first time around, if you've raised, it turns out the number of Kickstarter is $350, then you're better off relaunching the campaign with a slightly less goal, and you have a good chance of succeeding. If you raise less than $350, you should not do the same thing again, and you should do a completely different project. And you're still not as likely to succeed as somebody fresh to the platform, but you have a chance. So, in terms of behavior, we see people are gaming in all kinds of ways. The community often gets very upset if you're doing simultaneous projects on different platforms. And especially since you have passed the post in Kickstarter, it's strange to sort of divide your capital in that sort of way.
Okay,
But
Ethan, I want to get 3 more questions in, so
Yeah.
we'll limit you to 1 minute. Here. Now, you, sir.
Hello. Yeah, actually along the same lines. My name is Alex Feldman from Crowds Unites, and I actually work with businesses trying to find the best possible platform. So I think the platforms bring a lot of value to the projects. One of them is actually how much funding can they bring outside the funding that the projects bring. So if you've some of the stats, I'd love to hear it. And also any other value. Do you give them more exposure, marketing? If you're a small platform, do you work with them one-on-one to actually build a campaign? So love to hear like the value that you bring to the projects.
Well, I could start real quick. I mean, at Indiegogo, we actually, it's a very hands-on process for us because we really want campaigns to be successful. So we have 2 groups. We have a customer happiness group, and then we have a campaign specialist group. Usually when you go in, as you're going through your flow, the campaign specialist picks up your campaign and basically guides you and says, hey, this is what I think, this is how I think your campaign could be successful. And we really pride ourselves on basically like our service component. I do want to clarify one thing about success rate that's very nuanced, and that is that at our platform, you can have something called a flexible campaign, which means you may not reach your goal, but you still get your funding, right? And something that I learned at Etsy is that success is a very funny thing. When people say, what is success? It really varies by people. Because if you raise money just because you didn't meet your goal doesn't mean you didn't have success. It may have been that you have the wrong goal. So, you know, when we're looking at, I just wanted to clarify that a little bit. But for us, it's really, really important for us to look at that. In terms of like marketing, right now we don't do any like external marketing for campaigns, but it's something that we're thinking about.
Okay.
I think that was for all
Your
of us.
question?
Avi started the day by talking about why is it a good thing for the entrepreneurs? Very easy for me to understand. Why is it good for the platform? Very easy. They take money from the top. What's less clear to me is why is it good for investors? Let's say that I'm talking just investment to make money, or the illusion of making money. And the question is it like an alternative to be an angel investor, which people can do, or is it really like buying a lottery ticket, which means I expect to lose 50 cents on a dollar when I buy a lottery ticket, yet some people buy 1 or more every week with the illusion of making money maybe, but not based on scientific evidence that money gets made.
So I break this down very specifically between reward-based and an equity funding platform. So if you're participating in equity, you should be making money. You should look at it as an investment and evaluate it as an investment. If you're doing reward-based, it's a reward. So you get something, I don't even call it you're making an investment there. You're contributing. You're backing something, but that's not an investment. I draw a very clear line.
Yeah, I mean,
And-
I think about it basically like
We're
I
shy
had in my
here.
slide. The way we envision the future is, from an investor's perspective, you get to participate. And if you contributed to the campaign when it was nothing, you get to participate when it could be something, because you've already made a bet in their product, right? Now this levels the playing field, so now you can make a bet in their company, which before wasn't the case.
Okay, with the comment that our 2 practitioner members made actually some remarks that have a very strong theoretical academic backing, I'm going to say that we've reached the end of a fantastic conference. Please join me for a round of applause for Anindo. And for the person who did the real work, Mandy Osborne. Stand up, Mandy.